In this video, I'll be breaking down how much you need to make in order to afford a 2023 Audi Q5. I think you should really consider following one of these rules in order to avoid making a huge car buying mistake that'll end up setting you back for years down the road. I've also got a link to a free auto quote where you could save up to $600 a year in the description down below, but more on that later. There are 4 options I'll be going over today. You can decide on which one suits you the best depending on how into cars you are. Some people just want a reliable form of transportation. Some are willing to sacrifice quite a lot more in order to get the car that they really want. Stick around at the end of the video to find out what method would be best for your personal situation. This is 4 Wheel Finance, a channel dedicated to helping you make smart car buying decisions. Before I dive into the first rule, these videos take quite a lot of time and effort to make. Please give it a like, subscribe, comment down below what other vehicles you'd like to see. First rule is the 24-10 rule, and this states you should put at least 20% down. You shouldn't finance it for more than 4 years or 48 months, and the payment shouldn't be more than 10% of your monthly gross income. Since the 2023 Audi Q5 has an MSRP of $43,500, you'd need to put down $8,700. And with the average new vehicle interest rate of 3.86% and a 48-month term, this would bring your monthly payment to $783.57. Take note that you're also paying about $2,800 in interest. Bankrate states that the average monthly insurance cost is $148 a month, but this varies quite a lot from person to person. Your age, your gender, the demographic, what part of the country you live in. So use that smart financial link. Find out exactly how much it would cost for you to insure something like this or any other vehicle for that matter. This brings your monthly total to $931.57. Back to that 24-10 rule. Given your monthly cost would be $931.57, you'd need a monthly gross income of $9,315.70 or an annual gross income of $111,788.40. I really encourage you to look at the opportunity cost here. If you were to buy a cheaper $10,000 car and put what would be a car payment of $783.57 in the market instead, over the course of 5 years with a conservative 6% rate of return, that would turn into $54,712, gaining about $7,500 in interest. Take a look at those Acorns and M1 and finance links in the description below. It's very easy to get started investing, and I encourage you to do so as early as you can. And this is just for the first 5 years. If you were to continue on for 10 years, it would amount to $127,929, gaining over $30,000 in interest, which is pretty impressive. Again, just at a 6% rate of return. And for reference, the stock market averages around 10% return per year, so this is pretty conservative. Now the next rule here is my own rule. And for my rule, I think you should have at least a 6-month emergency fund, invest 15% of your gross income into your 401k, and max out both your Roth IRA and ideally your HSA if you have a high deductible health savings plan. Yes, I know this seems like a ton of saving, but I don't give you a monthly percent rule that you have to stick to beyond that. So it's up to you to decide if you want to spend more of your money on a vehicle, or if you'd rather spend less, go out to eat more vacations, etc. And that 6-month emergency fund just ensures that you're covered in the case that anything wild happens. And the investment portion gives you a little bit of financial security later in life when you're probably going to need it the most. The vast majority of people say that, well, nothing here is guaranteed, and that's totally true. But it's difficult putting a value on having peace of mind for yourself or for your family's future. So I highly encourage you to get started investing as early as you can. It's really special to see what can happen over a long period of time. Third rule I'll be going over is the Dave Ramsey rule, and he thinks you should have at least a 3 to 6 month emergency fund. The vehicle shouldn't be more than 50% of your annual gross income, and you should purchase it in cash. Given the 2023 Audi Q5 starts at $43,500, your annual gross income would need to be a minimum of $87,000. Ideally, it's nice to purchase a vehicle in cash, as you would avoid having to pay that $2,800 in interest, and your insurance would be a little bit lower. But obviously, not everyone has $45,000 that they could put towards a car, and there's a chance you could make more money having that in the market instead. The final rule I'll be going over today is called the 1/10 rule, which is developed by Financial Samurai. Personally, it was one that I think the majority of people should follow if they're trying to build their net worth as quick as they can. It doesn't really allow you to buy a new car, but it's set up to help you spend responsibly, which reduces your financial car ownership stress and increases your net worth a little bit faster over time. This rule is pretty straightforward. It states that you shouldn't spend more than 10% of your gross annual income on a car. And it can be new or old, but obviously for the vast majority of people, it's going to be used. And you should own it for at least 5 years, but ideally more. And the theory behind this is to minimize your financial stress and frees up a little bit of extra money to invest in assets or opportunities that may come your way. It's a lot more stressful making life decisions. It's a lot more difficult making life decisions when you're worried about payments each and every month. Once again, this is 4Wheel Finance. If you have any questions regarding car buying or how much of a car you can afford, please leave them in the comments down below, as well as other vehicles that you would like to see. And don't forget to give a look at that Smart Financial link if you'd like to save a little bit of money on your monthly car insurance. They shop around with some of the nation's top lenders, so see if they can find you a deal.